Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavalu, and we've got longtime fools Matt Frankel and Toby Bordelon giving a 1 to 10 rating to maybe the most surprisingly polarizing stock in the market, Disney, ticker symbol DIS. We'll prove it. First, we'll rate the strength of Disney's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Toby's going with a 9. Matt's a bit lower with a 7. We'll start with the bull case, Toby.
Yeah, and this business is as strong as it gets in the entertainment space. The brand is super strong. Yeah, who else out there can raise prices with apparently no limit, even in the midst of consumer spending concerns, and get people to keep paying up for what they're selling, right? Especially the theme parks. They have an ability to monetize content like no one else. They certainly aren't invincible, though, so that's why they're a 9 for me and not a 10. It is still a consumer-driven business that is vulnerable to recessions, and very capital-intensive.
Yeah, I went with a 7, and I would argue that I'm the bigger Disney fan of the two of us. But I agree with most of what Toby said, but it's the cyclical nature of the stock disturbs me at a time when the economy is very uncertain going forward. It's going to take a lot of capital to keep its parks relevant, especially with Universal's rolling out Epic Universe in Florida. That's what everyone's excited about, not the newest Disney ride that's being built. It's going to take a lot of money to keep that relevant. The cruise line they're putting a lot of money into, and that is great when the cruise industry is red hot right now, but not so much when you've doubled this or tripled the size of your fleet if the market takes a turn. So it's an asset and a liability at the same time. So I gave it a 7 just for the general dynamics of the business.
It also feels like Disney, it's always one of those where, man, if every part of its business was clicking at the same time, it never does. There's always one of the divisions that's like, well, this one, streaming's taking a hit right now, but the parks are all right, and vice versa, and all that stuff. Anyway, we'll get into that probably. Let's talk management. A 10 is Warren Buffett. A 1 is Homer Simpson. Toby's lower with a 6 this time. Matt's got the 8. We'll start with Toby's 6.
Yeah, start with Disney's executive team seems very good to me, right? The people in key positions are very good at what they do. I think my biggest problem here is senior management and the board. While I think Bob Iger has done very good things for the company over the course of his, 2 different tenures, I do ding him and the board for failing to do what I think is one of the most important things a CEO and a board needs to do, and that's secure a smooth leadership succession when it's time to transition to a new CEO. Last time was an utter failure. Will this time be different? We'll see. I'm also not super pleased that they seem to have problems hanging on to some of those senior executives when they have a disagreement with the CEO maybe, or when they get passed over for high-profile promotions. Though I guess that's understandable when you got a stable of people who are very good and quite ambitious, right? If they don't get that next level job, they're going to look for someone else, and they have the skills where they can do that.
See, if I was just rating Bob Iger, it would probably be even higher than the 8 I gave. But at some point, he's going to leave. He wants to retire. He already did retire. He wants to be done. And like Toby, I can't fathom why they can't do a better job of succession planning. You would think the Disney CEO job is something that every qualified person wants. So why can't they get the right candidate in place? That's a big question mark for me. Iger has done a great job of turning streaming around. And my biggest hope is not just that they get the right CEO in place, that they set up the business in a way that it doesn't really matter as much who's in charge. When Chapek took over, they had just rolled out Disney Plus, for example. So it really mattered who was in charge. So I want them to kind of get to a place where I can sleep easier about the succession plan.
Finally, someone agrees with me on Bob Iger with Matt. It makes sense. We're both shareholders. I agree with Toby, though, too, is the succession planning definitely leaves something where it feels like he wants to be needed a bit, right? But while he's there is no one I'd rather do. He has done so many great acquisitions and mergers and just navigating the streaming space. I think he's going to leave them in a good position, whether the next person, hopefully it will only require a ham sandwich.
Yeah, maybe that's the X factor is that he left Chapek with just too many question marks to work out, and maybe that was the big error.
Yeah, maybe his name just shouldn't have been Bob. It was just too close to home. You can't replace a Bob with a Bob. let's go with the financials. A 10 is a fortress. A 1 is yikes. Both of you have 7s. We'll let Matt talk this time.
Yeah, so things are definitely moving in a positive direction. There is a relatively high level of debt, and we're just really getting back to the pre-pandemic level of profitability. That's good news when you've been losing money for a few years because of streaming, but it's still just where it was prior. They expect enough operating cash flow next year to buy back about $3 billion in stock and increase the dividend while still having enough for that ambitious CapEx plan. Remember, they said they're going to be investing $60 billion in the Parks and Experiences division over the next decade. So if they can afford to do that, buy back stock, raise the dividend, great. There's a lot to prove, which is why I wasn't higher than a 7.
Yeah, 7 for me too. The debt is higher than I would like, for sure. And it is a very capital intensive business, and those are related things when you look at it. High debt because it's so capital intensive. But cash flow is positive again, as Matt noted. Things are moving in the right direction after this period of kind of restructuring, rebuilding we've seen the last couple of years. The streaming business is profitable in a sustainable way, I think, now. So things are looking up.
Yeah, if you didn't know about Disney's intellectual property, the numbers on its balance sheet are always a little shockingly not amazing. Let's talk about valuation. Speaking of numbers, Matt, how well will Disney stock do over the next 5 years, and how safe is it? Keep in mind, a 10 is a sure thing, a 1 is a lottery ticket.
See, for returns, I said 15% plus for the next 5 years. And for me, it's more of a question that the stock is currently undervalued than that the business is going to do that well. Safety score, I give it a 6. If the economy is strong, Disney should be a big winner. The stock trades at roughly 14 times their free cash flow estimate. They're projecting double-digit growth through at least 2027 on the bottom line, which is a pretty nice projection. And they're also allocating capital in buybacks, dividends, like I mentioned. That should help boost returns. But the stock is cheap right now, and if they can really get streaming profitability where it needs to be, I think 15% plus shouldn't be a problem.
Yeah, I went a little bit lower here, 10 to 15%. I think it's probably at the high end of that, maybe a little bit of a market beater here. I didn't go 15% plus because I was concerned about a near-term consumer pullback on travel spending that I think might be an issue here. Safety score, a 7 for me. That consumer spending risk in the near term is the big driver there. Plus this recent surge in stock price we've seen over the last couple of weeks here.
Time for everyone's favorite topic. Toby, is there a company in Disney space you like more?
Not really. In terms of the theme parks and the travel experiences, I don't think there's really anyone better out there. Now, you can point to some parts of the business, like maybe the cruise or the lodging or the guided travel, right, where there are some strong competitors in each segment, but not anyone who's overlapping in all those areas, I think. In terms of video entertainment, look, maybe you say Netflix because they command prices that are a level above where Disney is right now, but really no one has the full entertainment package that Disney does.
Yeah, I don't have a better one. Disney's a top 10 investment for me. Like Toby said, there are parts of the business where I can maybe name one. Like for cruises, I think Royal Caribbean's a great investment at the current price. But generally speaking, there's who's better than Disney?
Well, thank you to both Matt and to Toby. They've given Disney an overall score of 7.5 out of 10. It's pretty good. Now, if you didn't believe me earlier when I said Disney's a very polarizing stock, when Jim Gillies and Travis Hoyam did it about a year ago, they gave Disney a 4.8. Granted, that was before Bob Iger. That was at the very end of the Chapek regime. And I think I still strenuously objected back then. The 7.5 feels more in line with the brand power to me. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Roblox. Till then, Fool on.